Wonderful.
Good afternoon, dear viewers from Switzerland. Good morning to all those joining us in Latin America. Welcome to this latest LATCAM webinar. What are megatrends? Everybody has heard of them. Not everybody could perhaps instantly name all 12 of them. The Zukunftsinstitut describes them as avalanches in slow motion. They are powerful phenomena that influence the evolution of our society at organizational and personal levels. Therefore, they have a significant impact on political, economic, and individual decision-making processes. And they are the main sources contributing to the creation of new lines of business. Today's webinar, which is offered by our Chamber's patron, Bank Vontobel, is about Megatrend Investing and why it could provide growth in your portfolio. I'm honored to introduce our speaker, Dan Scott, Chief Investment Officer, Wealth Management, and Head of Impact and Thematics, Asset Management at Bank Vontobel. A warm welcome, Dan.
Thank you very much, Tatiana.
I'm thrilled that Arturo Stoecklin, Head of Wealth Management for Latin America and South Africa, who represents Vontobel in the LATCAM board, will address a few introductory remarks in a moment. A warm welcome to you too, Arturo.
Thanks a lot, Tatiana.
As usual, the webinar will be recorded and the recording will be posted on our website and on our YouTube channel, LATCAM Switzerland. At the end of Dan Scott's formal presentation, we will have time for questions. Please write your questions for our speaker in the Q&A section or in the chat if you prefer. Now, I may invite you, Arturo, to take the virtual floor, please.
Thanks, Tatiana. Dear members and participants, it's a pleasure to welcome you in the name of Vontobel to this webinar. First of all, a huge thank to you, Tatiana, for giving us the opportunity and the platform to share interesting insight. Always looking forward, Vontobel actively looks after the assets of its clients and across generations. We take a holistic approach, monitor the markets closely, anticipate trends and opportunities, and develop individual solutions. Today, I'm very pleased that our Chief Investment Officer at Vontobel, Dan Scott, has joined me to make sure that this webinar will show you more about our expertise as wealth manager, but also as expert for topics which will shape our future. I hope you will enjoy this session, and without further ado, I would like to welcome Dan Scott. Dan, the floor is yours.
Arturo, thanks very much. Ladies and gentlemen, thank you for your time, for joining us here to discuss a review and outlook on markets where we stand at the moment. As introduced, I'm the Chief Investment Officer, so I'm responsible for discretionary portfolio management here at Vontobel. And I'm also the head of impact and thematics in asset management, which means that I run thematic equity strategies as well as impact and ESG tilted investment strategies. And I'd like to give you a quick view on where we see markets at the moment, and then go into megatrend investing, why we employ megatrend investing, and how it could boost your portfolio as well, why we think it makes sense to have this approach. So let me start off by taking a look at markets so far. Year to date, you can see it's been another year where asset classes have returned very well. Over the past 5 years, we've had quite a few years now of outsized returns, mainly because central banks have been acting in a way of financial suppression, forcing market makers to take outsized bets, but also really stimulating the economy now after the COVID lockdowns. And that's also been driving asset class returns. So you take a look at the equity markets, you can see most equity markets this year in positive territory. NASDAQ, the tech heavy of the equity markets, is not an underperformer, but it's not the top performer this year. It has over the past 10 years, pretty much always been the top performer. So this is one of the first years where we see a broader economic recovery, not just tech stocks doing well. And then these are asset class, excuse me, returns in US dollars. And if you take a look, commodities, also an asset class that's done very well, especially for commodity exporting countries like Brazil, like Russia, a very positive developments, because of course, with these increases that you have in commodity prices, all the way from soft commodities to oil, that of course helps the balance sheets of countries that export commodities, and conversely hurts those that are commodity importing. So within emerging markets, that's been a key theme. While China and North Asia have done well in general over the past 10 years, outperforming most of the EM space. Recently now, it's more the commodity exporters that are on the gain. Fixed income, of course, the difficult asset class. Now, if you take a look at where we stand at the moment, global economic momentum has definitely softened somewhat. Immediately out of COVID, with all the stimulus measures, it's clear we had very strong economic momentum. Comparison periods were easy. And what's happening now is that momentum's slowing quite a bit as the growth starts to slow down. And that's happening for a number of reasons. One, we're past the peak in the business cycle. We're also seeing monetary and fiscal stimulus starting to abate. But then also you start to have supply chain issues, and that's really slowing things down. And this
Excuse me, Dan. Yeah. Excuse me if I interrupt. Didn't you want to share your presentation?
Oh, my
I'm
apologies.
not seeing any slides here.
Hold on a second.
I can do it for you if you prefer.
My apologies. Okay, here we go. Are we seeing the presentation now?
Yes, we are.
Okay, very good. My apologies, and thank you for interrupting. So we're on the global economic momentum and the slowdown that we're experiencing at the moment. Now, the slowdown in growth is a slowdown in growth. It's not a contraction. So, hold on, it's okay. Markets are still doing well, but this comes at the same time as central banks now starting to talk about tightening rates. And so it's a tricky part for markets. We expect increased volatility and also a dispersion of returns as markets start to digest tightening financial conditions and a slowing down in growth. Now, the other issue that we have is there's a real chaos in supply chains around the world, because you had an immediate turning on of demand after COVID lockdowns, after inventories have been run down. And especially for container shipping, that's really caused havoc. You can see here the Baltic Exchange and the HARPEX. These are two price indexes for container shipping. They're through the roof, and they're at prices that we haven't seen before the last, financial crisis, basically, or the last recession that we went into. So that's definitely something to keep in mind. Prices really highly elevated, and it's not because there's a lack of ships in the seas. It's because ports aren't able to unload those ships quick enough. You can see that throughput is very strong on the right-hand side. That's the volume index growth. Again, strong growth, growth that we haven't seen in a very long time. Energy inflation is the other thing I wanted to quickly touch on. This is a big point also for LATAM. Energy inflation, you can see, is being driven by a number of points. I'd like to highlight that China is the world's factory, a big consumer of energy. And now what's happening is we transition from fossil fuels to renewables, is that coal falls away as a production input. And when coal falls away, means that you're more reliant on renewables, making a bigger part of the energy mix. Gas at the moment is setting the marginal cost of energy. So when production comes up and there's more manufacturing happening, you take coal out, you have a problem that the prices come higher. Energy inflation has also surged in Europe. Inventory levels of gas in Russia have been drawn down. So far, there isn't much supply through Nord Stream. And what gas there was in Russia was being exported to China because, of course, they're willing to pay a higher price. And that has also caused some havoc in Europe. So how is this perfect storm gotten here? Again, energy revolution. Watch the weather. From here on out, weather events are going to be more important. In Brazil, you had a lack of rainfall, so that meant less hydroelectric. In Europe, you had a wind lull, So that's also an issue because if the wind's not blowing as hard, and again, you don't use coal or atomic, then you need to use renewables or more dependent on renewables, i.e. more dependent on the weather. So going into a cold winter, this is going to be one to watch as we transition to renewable. And then, of course, this transition to renewable also means a lack of investments in old energy, drawing down inventory levels, not reinvesting in things like gas storage. These are all things that might be rethought as we try and chase net zero by 2045 or 2050. Yeah, and then of course, COVID-19 and geopolitics having an impact as well. China now has conveniently forgotten that it's embargoing Australia because they've suddenly decided that they actually do need to import some coal. So these are all points to keep an eye out on. We think what's going to destroy this energy inflation and why it's transitory is because prices cannot continue to rise like this without there being an element of demand destruction. So we expect prices to come down a bit from that perspective. All right, so where are the key risks for markets at the moment? What we see is that these shortages cause inflation that we see in the system to be a bit more sticky, i.e. less transitory than is constantly being discussed. The other risk is that central banks could raise interest rates quicker than previously had been expected, i.e. less accommodative as they're watching this inflation. And the other part is China and what China is going to do. You can see that in terms of domestic policy, it's been very heavy-handed with many of its own industries. And China's geopolitical aspirations are, of course, also something to be to keep in mind. So we're positive on markets. We currently have a risk-on stance. We've just gone double overweight equities in the US. But we do keep those risks in mind. And for that reason, we still do have a fixed income positioning. We're neutral on government bonds overall. We do have an allocation to gold. It's about 4% in a balanced portfolio. So fixed income gold gives us some portfolio smoothing. And otherwise, you can see the allocation and the risk view is still fairly positive. Now, this part of the introduction I wanted to give so you understand how we allocate to asset classes, what our positioning is. And now the topic for today is megatrends, and that plays a big role in this equities positioning and how we allocate to equities. Because apart from having this regional view, what's important is that we invest in the right equities. So in our global equity allocation, megatrends are a dedicated position. Regardless of where we are in the economic cycle, always about 5% of our equity allocation is in megatrends. And that's because we think that megatrends are an intelligent new taxonomy on equities. Rather than thinking of regions or sectors, you think about these structural changes, and companies that have solutions to those changes will then naturally have a long runway in terms of earnings growth because they're going to benefit from these structural changes. So this is the quote that we very often start off with. People tend to overestimate things in the near term and underestimate the actual broad changes that things will have over the next 10 years. If you think about, before the last dot-com bubble, how everyone was excited about any stock that was called .com and the internet, throwing money after anything called .com, that was maybe a bit overexcited about internet as a platform. But nowadays, we can't think of any business process. It's innate in any technology, basically, that we have some sort of internet capability. So the structural change was definitely there, but being able to capture the companies that have the technologies is the art. So we often think in a linear way, but progress doesn't happen in a linear way usually. Usually the change is exponential. NVIDIA, which is a company that is or has products that are used in all sorts of underlying trends, processors for gaming, for crypto, for cloud computing. Back in 2011, 2012, 2013, it was a company that was out there with investor presentations mainly around mobile phones or other types of applications where you would have a need for a processor that NVIDIA can supply. In the meantime, you can see that this has changed exponentially on the back of a number of underlying trends that are on the base of computational capacity. So themes emerge from megatrends. So when you hear about thematic investing, it's important that for us that we always allocate them, that we allocate themes to these megatrends. It's the broader megatrends are demographics and urbanization, technological convergence, sustainable value creation in multipolar worlds. And from these, we come up with themes where we feel as an equity investor, you can be invested and benefit from long-term structural change. And let me show you a little bit in detail what that means. So it's being invested in a diversified equity portfolio in companies that aren't necessarily the standard benchmark names. So for example, if we want to be a disruptive investor, when we're buying financials, we don't just buy a normal bank, we buy a flatex to Giro. Or if we want to be invested, for example, in a topic like esports and mobile gaming, we look for companies like Corsair. Or if we're trying to find out, who's going to be a beneficiary of this energy revolution, we end up coming across companies like Plug Power in the US that started off as a company that provide fuel cell for forklifts. So all the forklifts in the Amazon fulfillment centers, for example, are Plug Power forklifts, but in the meantime also have electrolysis technology for hydrogen. And then vertical farming, bioscience, this is the way the portfolio now looks. What you'll notice, and why we write the IPO dates, is that our companies that we have in our portfolio there tend to be quite a bit younger than the benchmark. And that's, of course, because emerging technology means that very often you end up with companies that haven't been around too long. Doesn't mean that the established majors aren't also companies that have very good intellectual property. But in aggregate, you can see that our fund here, represented by the black bars, has companies that are quite a bit younger than the benchmark. The benchmark is MSCI World, all countries. On average, the companies there are around 30 years old. Our companies tend to be around 20 years old. It's important because technology itself and technological innovation is also one of these things that does not grow in a linear fashion, also tends to grow much more rapid than we expect these things to happen. And you can see that average year on the market for a company, it keeps changing. General Electric, 130 years, Intel 50 years, the index itself, MSCI World, keeps getting younger. So that's how the fund looks. And now what I would like to discuss with you a little bit more in particular, given the audience is interested in LATAM, does business in LATAM, is from LATAM, LATAM's role basically in this space of megatrends investing. And instead of just looking at all the megatrends, we decided to focus in on one, fintech, to show that LATAM has areas of leadership as well in thematic investing, and how we come across LATAM names in our portfolio as well. Also names that aren't necessarily in the global benchmark. So again, if you take a look at the way things looked in 2017, here you see account penetration, debit and credit card ownership across regions. And you can see that Latin America and the Caribbean at the time would have been a market where you talk about an underbanked population and the need for financial services to reach out. In order to promote wealth creation, we need better banking services. That would have been the discussion in 2017. The Euro area, definitely with a high amount of account penetration. And then you have LATAM, basically just above sub-Saharan Africa in terms of account penetration. So that would have been the topic in 2017. Things can change fast though, because very often being behind gives you a chance to do leapfrogging. And at the moment, because there was a unbanked population, you have a lot of digital solutions now, and also governments and regulators were more open to allowing fintech to progress in LATAM. So if you take a look at, for example, bank penetration now across the top 6, you can see we're looking at 70%. So those are very proud numbers, 70% banking penetration. And actually the breakdown is quite high in terms of fintech, so or digital solutions. So we see 6 trends in LATAM payments. You see the disappearance of this unbanked population, instant payments replacing cash, debit cards becoming top of wallet for purchases, contactless payments. I mean, we notice these things ourselves just on, when I'm on business in LATAM. It's very apparent to me that, in fact, it's much easier to be contactless and instant payment than here in Switzerland. So that definitely a change just over the past few years. And you also have SME digitalization, which is a driver here. Now, banking as a service over open banking, this is somewhat that's a bit geeky here on the tech side. Basically, banking as a service means that a fintech can use the platform of a bank to make its own services, and open banking would just be offering a fintech access to data that a bank has. The reason why this is a topic is because regulation in developed markets has been quite restrictive in what kind of services fintechs can offer. We find in most LATAM markets, the regulator has been quite open, especially in places like Brazil, perhaps a bit less so in Mexico, but then that's why the numbers look a bit lower in Mexico than they do in a place like Brazil. So getting to the names in our portfolio, we have a number of companies that we see as real leaders in the space of fintech. You can see that we have a Brazil focus here, but PagSeguro, Stone, Mercado Libre are names in our portfolio. And when you remember the Megatrends overview, these are in our fintech portfolio. But like for so many Megatrends themes, you do tend to have overlap sometimes. And Mercado Libre could just as well be an e-commerce theme as it is in a fintech portfolio, because of course its products are about online retail ecosystems and payment processing. And so, mobile point of sale, these sorts of things are just as much e-commerce as they are fintech. But yeah, it's part of our fintech portfolio. So being able to bank and to do financial transactions in a digital way is something where LATAM, we feel, is quite developed in, and possibly because it had a need to reach an unbanked population. It was one of the reasons why we saw this exponential growth in the underlying trend. Now, I want to leave time for questions, so let me get through some of my last slides here. Let me tell you that going back to my role as an asset allocator, why do I think it makes sense to have a thematic exposure in any equity allocation? Well, again, it's a more intelligent taxonomy. Basically, having a thematic exposure gives me long-term, forward-looking structural trends. It means I don't need to be worried at what point in the economic cycle we're in, because the revenue growth for these topics like energy transition are going to last the next 10, 20 years, regardless of where we are in the economic cycle. The economic cycle might slow down or speed up the progress, but it's going to be progress throughout. You also capture areas of disruption and innovation. The world's changing. You need to be on the leading edge. The index is always changing, so your allocation should be as well. And these are the drivers of future earnings growth if you're there where there is structural change. So you have a slowing global growth. The economy is still growing. Equity returns will be positive. We're quite confident that at the end of the year, equity markets are going to be higher than where they are now. But earnings are slowing, which means dispersion in returns becomes a topic, and selection of the underlying equities becomes more important. It's not just the entire market that's going to rally. You really need to have an understanding of where you're going to have quality earnings growth. And of course, while rates are likely going to rise somewhat, even if they hit 2%, historically speaking, they're still very low. And now, why is that important? Because low interest rates mean a low cost of capital, and a low cost of capital incentivizes growth investing, because if you can access capital inexpensively, of course, it incentivizes you to go out and do something with that money rather than just sit on it and distribute a dividend. So while some treat thematics as a satellite, somewhere between 0 and 20% of their allocation, we definitely think it needs to be part of a core allocation. And that's why it's a dedicated part of our portfolios. Yeah, so that's a roundup of where we see the markets and what we think about thematic investing. And yeah, maybe I'd open it up to questions.
Well, for the moment then, I don't have any questions out there, so maybe I could ask one. How big is your investment team, worldwide speaking? And how long does an analyst in this team on average have to analyze a company before it is decided that this company should make it in the model portfolios or in the sort of range of recommended companies for investment within your particular strategy?
Thank you, Tatiana. Very good question. So the team for what we've just been discussing right now, that's the equities, impact and thematics, is 12 people. And these 12 people are separated, or not separated, but they're dedicated to individual topics. And that ensures that there is a good understanding of the theme as it develops. Now, because we're listed equity investors and we're institutional investors, we have a size that doesn't allow us to go into micro caps, tiny companies. We need a company to be big enough, so we restrict ourselves to a minimum 500 million market cap in companies that we invest in. This also means that we have less volatility in those names and gives us more capacity so that the fund can grow to a size of 5-6 billion before we need to adjust our investment process. And now the reason why I highlight this is because that means that the themes that we pick up have to have longevity. We don't want short-term trends. We want long-term structural trends, themes that are going to be around for 10, 20 years. We don't want to be churning, next week's hot topic. There needs to be enough of an investable universe of equities within a theme in order for us to be invested in. And then we have analysts that are dedicated to topics like cloud computing or like healthcare or like agriculture to understand what is happening within those industries in order to know where intellectual property development is going to lead to increased earnings. So, it's nice to pick up the topics like esports, cloud computing, the buzzwords that you hear a lot, but it also happens in other industries, again, like agriculture. It's, a company like Deere spends 4% of revenue on innovation. And it's a reason why about 1/3 of revenues in the meantime come from digital agriculture, come from what they call precision agriculture, software services. So yeah, it's a tractor company. 30% of revenue come from software, not something that you would know if you were just allocating according to the GICS, Global Industry Classification System. Then it would just be classified as an industrial. And so that's very important that these analysts have depth in their topic to understand what companies are doing, where they're investing. And last but not least, for us, what's very important is being able to calculate how much of the earnings of a company are related to the theme. Because the worst thing about, or one way you can get thematic investing wrong is, if a company has the story that they're interested in a topic, but it's really irrelevant to earnings. Because then as a shareholder, you don't have exposure to the theme. You just have a great slide deck that talks about how, company X wants to be a leader in, nutrition. So that's not that's important for us to have what we call thematic purity, to make sure that what we own has a high degree of exposure to a topic. I can give maybe a more precise example. I recently came across a thematic investment product that was called blockchain and crypto. And when I looked at the underlying equity holdings, I saw Bank of America, for example, in there among the names. And while Bank of America actually does have a team of people that are investing in how to apply blockchain tech to their business, I can tell you that that has zero influence on what the shares are doing. So it doesn't make sense to add them to a portfolio like that. With the conglomerates, like an Amazon, of course, also we struggle because Amazon has exposure to many themes. It's a conglomerate. It has Amazon Web Services is one part of the business. Online retail is another part of the business. So really, you can allocate it to a number of topics, also fintech.
Mm-hmm. Thank you. I see I have now one question. Actually, one hand went up. Carlos Represas, our board member, is requesting to speak. So, Carlos, I have just given you authorization to speak. Maybe you can unmute yourself. Go ahead, please.
Thank you, Tatiana. Dan, I found very interesting your expose on these global mega trends. But if I try to boil it down to Latin America specifically, I wonder to which extent you can isolate these mega trends from the political and social situation going over Latin America today. In other words, if we look at the region, we find out that since the middle of last century, certainly in the whole of Latin America, we have not had the kind of political and social turmoil that we do have today. So looking specifically at Latin America, which is, in your opinion, the impact that this specific regional situation has on your mega trends variable?
So thank you very much, Carlos, for the question. The regional aspects of our strategy happen not at the beginning of the investment process, but happen more so when we're looking at the individual names. Politics is unfortunately never something that you can remove from the investment decision calculus. As managers of money, what we end up doing is assigning a country risk. And in our DCFs on the companies, we will discount companies from certain regions depending on what level of governance issues we feel that country has. So the reason why Russia trades on 6 times forward PE is not necessarily because we think the companies are so, or the global market thinks the companies are so bad. It's mainly because there's political risk. People are afraid that if they're invested in a company that suddenly someone comes and, from government decides to help themselves to the free cash flow generation. Has very often happened, not just in Russia, also in other regions, that the governments have decided that, an energy company or a mining company might suddenly need to pay higher taxes to extract copper, for example. I'm trying not to name any Latin American countries here. Yeah. So that usually flows into the country risk. Having said all that, it doesn't mean that we don't find opportunities, because as long as we feel comfortable being equity investors, and I'd say practically all LATAM countries, we would feel comfortable being equity investors, still do provide some opportunities. And very often, the higher the country risk in that DCF type analysis, the lower the valuations. So, you're compensated. It's like the price and the yield of a bond. They're two variables.
Then I have no more questions for you. So I don't know if Arturo would like to add anything.
No, it's perfect in this case. Thanks a lot, Tatiana.
Very good. Then if there are no more questions, let's conclude this webinar. Thank you very much, Dan Scott, for presenting us an array of possibilities around thematic investing based on Vontobel's model. And thank you also, Arturo, for kindly supporting the idea of this webinar. And I found particularly interesting the summary, the visualization of the current challenging economic situation, especially concerning energy and supply chains, which you used as an introduction to your presentation. So thank you very much for giving us that outlook as well. And dear viewers, I hope that this webinar gave you some positive food for thought, and I look forward to our next time together. Till then, stay safe and goodbye.
Thank you.
Bye.
Thank you.